Good morning, everyone. Today is the second session on Ind AS 103, that is dealing with business combinations. So, in the previous session, we saw what is a business. For business, there are three important things. There should be inputs, there should be processes, and lastly, there should be the ability to generate output. It could be actual or it could be an ability. But whatever the thing, these three things should be there. What do you mean by inputs? Property, plant and equipment, intangible assets, staff. Okay, all the inputs which you need to carry on the business. Then you would have processes like manuals, procedures, standard operating procedures, etc., etc. All those things should be there. And finally, with the help of the inputs and the procedures, you should have the ability to generate output, or you should be generating the output. Okay, so if these three things are there, it will be called as a business. And by virtue of it being a business, the next part that we discussed was control. Okay, so when you talk about control, again, there are three things that we discussed as far as control was concerned. Control is made up of three things. One second. This was business. Control made up of three things: power to direct the relevant activities, exposure to variable returns, and ability to use the power to affect the variable returns. That is the linkage between the power and the variable returns. So this spoke about control. I repeat, nowhere they have mentioned stake, nowhere they have mentioned the percentage of stake. So percentage is not at all a criteria that we are going to look forward. Stakeholding is not at all a criteria that we are going to look forward when we move with business combinations or even consolidation for that perspective. Okay, so that is the meaning of control. When we speak about power, what do you mean by power? Well, power is derived from existing rights. Existing rights could be substantive or protective. We will only consider the substantive rights, which give a current ability, okay, not a future ability. This should be exercisable right now to direct the relevant activities. Relevant activities means the core operating activities, not merely some administrative processes. Okay, so that takes care of the meaning of control. That takes care of the meaning of control. We also saw what is excluded from Ind AS 103. First one is obviously asset purchases which do not constitute a business. Okay, so we saw one example how the allocation will happen. In the case of asset purchases, initial recognition will always be at cost. Transaction costs will be capitalized for asset purchases. Goodwill will not come because you do the allocation based on the fair value if there is a barter transaction. And it is covered under the respective Ind AS 16, 38, 40 for acquisitions, 41 for agriculture, 105, 109 for 109 also for financial assets, 105 in case you decide to dispose of an asset, how that will be recorded. So that takes care of asset purchases. For business purchases, acquisitions will always happen at fair value. Transaction costs will be expensed to the P&L. Goodwill will arise, and this is covered under 103. And then the next one we saw the exclusion was joint arrangements. So very obvious cases of scope exclusions, nothing special about it. Okay, so that takes care of what we had done in the previous session. We then move on to the actual chapter proper. We had a lot of introduction in the last class. So today we start with what all is going to be covered under business purchase. I will be drawing a lot from what you did in your intermediate. Then we will also be starting the 6-step acquisition accounting model today. And then we'll see how it goes ahead. Okay, so because of paucity of time, I hope that you have been able to view the examples that are given in the study module about the concepts which we have so far discussed. Okay, like business control, etc. You would be having lot of theoretical illustrations in the chapter on business combinations and restructuring, as well as you would be having lot of illustrations in the chapter on consolidation relating to control. Okay, so I hope that you could go through those illustrations and that could make your concepts more clear. If there are any doubts, you can feel free to ask me. Okay, so with that, let us come to business combinations. Okay, let us come to business combinations. Okay. As I said, business combination is very wide in its coverage. Okay. We discussed AS14 in brief. AS14 always had the presumption that the target company shuts down and the acquirer takes over it. So that whatever be the case, whether it is amalgamation, whether it is absorption, whether it is mergers, whatever be the case, there will always be a shutting down or a liquidation of one company, and there may be no incorporation or fresh incorporation of the acquirers. Okay, so it could be either of these two, but one thing is sure, the target is always going to get liquidated. This was the presumption which we had in AS14. The second presumption which we had was, if you are acquiring a company, it is deemed to be a business. Whereas यहाँ पे वैसा नहीं है. We saw the case of shell companies. It's not necessary to be a business, because business should satisfy those three conditions which we have already discussed. So what is going to be covered under business combinations? Okay. The following transactions are covered. First one, amalgamation. This is two companies coming together to form a third entity. Okay. Second one is absorption. This is one company that is getting absorbed by the other company. Third one, acquisition of a division. I gave you the example of HUL acquiring the consumer healthcare division of GlaxoSmithKline. GlaxoSmithKline, my friends, is still a very much running entity. And at the same time, it has sold one of its divisions to Unilever. So that would also be covered under business combination. And the last one is very important from your examination perspective, which is acquisition of subsidiary, which is acquisition of a subsidiary. All these four things are dealt with under Ind AS 103. You can make a note of this. All these four are dealt with under Ind AS 103. Okay, so amalgamation, absorption, acquisition of a division, as well as acquisition of subsidiary. So in these cases, the first three, actual transfer of assets and liabilities to the acquirer, Okay, actual transfer of assets and liabilities to the acquirer. This is what happens practically. Okay, this is what happens practically. All right. Actually, you will pay stamp duty to transfer immovable property. You will actually raise an invoice to transfer movable property to the acquirer. All these things will actually be carried out in the case of amalgamation, absorption, or acquisition of a division. Okay. Or there may be a business transfer agreement where in a series of series of agreements, your assets, liabilities, etc. are actually being transferred. All right. So this is the case. In the case of acquisition of subsidiary, assets and liabilities remain with the subsidiary. Acquirer acquires shares of the target company. Okay. Acquirer acquires shares of the target company. So, in other words, in the case of acquisition of a subsidiary, you will be having a concept of standalone or separate financial statements plus something known as consolidated financial statements. So here you will be having the concept of standalone or separate financial statements plus consolidated financial statements. There is a separate standard on separate financial statements in AS 27, and consolidated financial statements is dealt with under Ind AS 110. Consolidated financial statements is dealt with under Ind AS 110. Whereas here, standalone or separate financial statements is nothing but the consolidated financial statements as far as these entities are concerned. This is a very crude fashion of explaining to you, because ultimately what is the substance? Assets are actually getting transferred. So it's kind of saying that you are consolidating one by one the assets and liabilities of the target company into that of the acquirer. So I will not have a separate consolidated financial statements as far as these three transactions are concerned. But it may so happen that A Limited absorbs B Limited and acquires the shares of C Limited. This is absorption. This is subsidiary. So what will be the case right now? There will be a consolidated financial statements of A and C Limited, and B Limited would not exist after absorption. So its assets will ultimately go and form part of the A Limited separate financials, which would also form a part of the consolidated financial statements. So that is why we have used the term standalone equal to consolidated. That's it. Otherwise, it's actually not the case. Okay. So I hope that you have understood this. All these transactions are going to be covered. All these transactions are going to be covered under Ind AS 103. Have you noted this down? You can just write this and make a single strike through. Okay, because technically that is not what it is. But in a manner of explaining to you guys, I had to take that, what you can say, that case. Okay. Now, Ind AS 103 is a one-day standard. It is applicable only on the date of acquisition. After that, Ind AS 103 will never be applicable in the lifetime of the company. 103 applies only and only on one day, that is the date of acquisition. Just give me a minute. Sorry about that. Okay, fine. So you can note down Ind AS 103 applies only on the date of acquisition. Only on the date of acquisition. Thereafter, for amalgamation, absorption, division transfer, and the other cases for subsidiary. In this case, regular accounting as per other Ind AS. Since assets and liabilities are transferred, comma, target ceases to exist. Hence, only separate financial statements are prepared. Okay, this is obviously under the understanding that, or under the assumption that, assuming acquirer has no other subsidiaries. Only standalone would be prepared, only separate financial instruments would be prepared. For a subsidiary, there would be two things. Okay. One is acquirer would record its investments in the subsidiary. As per Ind AS 109. I'll just put a star on this. There is an exception that is there to this. Okay. But I will first explain what 109 briefly discusses. You all are definitely well versed with 109 by now. So we will discuss what happens in 109. Then I will briefly touch upon Ind AS 27 to know what is the relaxation which is given to the acquirer in such cases, and we will look at the exception. That's it. Okay. Subsidiary would exist even after the acquisition. Even after the acquisition. And its separate financial statements would be prepared. Okay. Additionally, consolidated financial statements would be prepared at every reporting date, for which Ind AS 110 would apply. Okay, for which Ind AS 110 would apply. Are you able to follow? Are you able to follow? Yes. Have you noted this down? Have you noted this down? Done. Okay, Srishti has confirmed. Soham has confirmed. Where are the others? Nidhi is there. Kaushiki is there. Kaushiki, did you follow? Yes. Have you noted down? Nidhi, done. All right. Okay, fine. So you guys have noted down. All right. Now, in brief, I had put a star for the Ind AS 109. I had put a star for Ind AS 109. Let us now check this. See, entity acquires investment in subsidiary. So you would have studied, one is amortized cost, recording your financial instruments, financial assets at amortized cost. Can I follow the amortized cost for acquisition of equity? Can I record equity instruments using the amortized cost model? Answer is no, because it fails the contractual cash flows test. It fails the contractual cash flows test. What is the contractual cash flows test? You have to understand, you have to check whether you're holding your investments solely for the purpose of principal and interest. Whether you're holding the investment solely for the purpose of satisfied, amortized cost would be an option to record this. So since this is investment in equity, the contractual cash flow model test fails, and therefore amortized cost cannot be applied. Okay. Since contractual cash flow test fails, comma, amortized cost model fails. Okay, so this is what is your first part. Amortized cost is excluded. Amortized cost is excluded. Let us then move on to the remaining ones, that is at fair value. At fair value. Ind AS 109 tells us, yes, ye to aap kar sakte ho. You have to do this for equity. There are again two options as far as equity is concerned. The first option is fair value through other comprehensive income, FVTOCI. The second option is fair value through P&L. The second option is fair value through P&L. So this option is irrevocable. I hope you guys remember, irrevocable option. Movements in fair value recorded in OCI and accumulated in separate reserve. I hope you guys remember this. Accumulated in a separate reserve. Typically, we name it as fair value reserve, but you can name it any other name that you have. When the assets are disposed of, when this equity is disposed of in the separate financial statements, this would have a movement directly from fair value reserve to retained earnings. You would not have this fair value reserve coming back to your profit and loss account. Okay, so this is an irrevocable option. This is an irrevocable option. Okay. Here, FVTPL, movements in fair value are recorded in the P&L. Okay, so from P&L it directly moves to retained earnings. Okay, so there is no other what you can say, there is no problem in this. So I hope you remember this. This is the case in standalone or separate financial statements. Okay. But let us understand why 109 was brought in. See, 109 was brought in because you are holding investments in financial assets as pure investments. Okay. Pure investments means what? You are going to either get income from those investments in the form of dividends or interest, whatever it is, or you are going to get the benefit of capital appreciation. You are going to get the benefit of capital appreciation. So therefore, Ind AS 109 is framed in accordance with this thought process that the reporting entity has. However, when you acquire a subsidiary, the thought process is not to trade in these. The thought process is not to trade in these. The thought process here is to do business. The thought process here is, I want to carry on business using this. So take, for example, a company like Tata Sons. Tata Sons has its interest in Tata Consultancy Services, which is an IT company. It has its interest in IHCL, which is a hospitality company. It has its interest in Tata Motors, which is an automobile company. Now, Tata Sons is not interested in getting passive income from these entities. Tata Sons, the trust, is actually carrying on business through these diversified entities, and therefore the standard setters felt that applying Ind AS 109 will not result in giving a fair view to the readers of financial statements. So what they said was, look, 109 deals with investments which typically have a short lifespan. By short lifespan, I don't mean less than 12 months. I mean, it is in the foreseeable future, you definitely intend to dispose of these investments. But there are some investments which you do not intend to dispose of. Take the case of Suzuki, which has invested in Maruti Udyog. The investment happened maybe decades ago, and abhi bhi wo chal raha, it is still going on. So the intent is not to sell the Maruti Udyog shares. The intent is to carry on the business. So that is why Ind AS 27 came into existence. Ind AS 27 came into existence. This deals with separate financial statements, which gives us the option that investments in equity in case of subsidiaries, associates, joint ventures. Investments in equity in case of subsidiaries, associates, joint ventures can be stated at cost. Can be stated at cost. Okay. Or in accordance with principles of Ind AS 109. So there is an option which is given to the entities. There is an option which is given to the entities if you have investments in equity. And this equity is in case of subsidiaries, associates, or joint ventures. Okay. Matlab, you have acquired a company. It could be either subsidiary or an associate or a joint venture. If that is the case, then it can be stated at the equity can be stated at cost. Equity can be stated at cost. It is not going to be regarded as a departure from Ind AS 109. Sir, mandatory hai? Nahi hai. आपको चाहिए, then you can follow FVTPL or FVTOCI model also. But generally what companies prefer is, एक बार मैंने subsidiary खरीद ली, then I will continue to state it at cost only in the financial statements. गड़ी fair value करके what do I want to prove? I don't want to prove anything. Okay, so Ind AS 27 separate financial statements gives this option to you. Okay. Generally, questions in examination come with the presumption that investment in subsidiaries, associates, joint ventures in separate financial statements is stated at cost unless mentioned otherwise. Unless mentioned otherwise. Okay, so this is what we will also be assuming. It is fairly logical, okay, to assume this because by information dena chahiye, nahi diya hai, then it is stated at cost. There is no further complexity involved. Okay, so this is how you will understand the problems. Okay, have you noted this down? Are you having any doubt so far? Nidhi, Srishti, Soham, Kaushiki. Just 4 are there today. Done? Okay, fine. Fine, fine. All right. Now, the accounting process. Ind AS 103 on date of acquisition. On the date of acquisition. So this is what we are going to start now. Extremely important. Out of these 6 steps, there are certain steps which are even more important than the others. Okay, so we will start this accounting. Okay, this is the 6-step model. This is the famous 6-step model that is there. You would have done this when you did amalgamation or absorption. Okay, वो 6-step है कि 5-step है वो मालूम नहीं रहेगा आपको, but it would typically be a 5-step model. Here it is a 6-step model. One extra step is going to be there. Ultimately, the objective of Ind AS 103 yaad rakho. You have to understand the objective of each standard before you start studying it. The objective of 103 is to arrive at goodwill on the date of acquisition. That is what is the objective of 103. And goodwill kaisa hona chahiye? How should the goodwill be? That goodwill should be a true and fair value. It should be a fair value. It should not be a biased value. So we will have steps 1 to 5, which are going to discuss all the preliminaries before we move on to step 6, which is where the goodwill takes birth, which is where goodwill is born. Okay, which is where the goodwill is born. So this is how we are going to understand every adjustment. Every concept that we are going to apply will always be from the perspective that सोचो कि क्या करने से, by doing what will my goodwill be fair? By doing what will the goodwill be fair? Once you start thinking it in this manner, you don't need to by heart the adjustments. Automatically, you will come to a very logical conclusion as far as the goodwill is concerned. Okay, so what are the 6-step model? What is the 6-step model? What are the 6 steps? The first step is identify. You can note down along with me. Identify the acquirer. The first step is identify the acquirer. Very important. भाई गुडविल किसके बुक में अकाउंट करना है? वी हैव टू डू इट इन द बुक्स ऑफ द एक्वायरर. तो एक्वायरर कौन है? दैट इज व्हाट वी आर गोइंग टू बी इंटरेस्टेड इन. द नेक्स्ट वन इज determine date of acquisition. This is the only place where I will use the full form. After that, I will use the short form DOA. Examination mein, this is not an accepted abbreviation. You will have to write the full date of acquisition or just acquisition date. That is also fine. Third one, calculate purchase consideration. Calculate purchase consideration, which is what we call as PC. PC is an accepted abbreviation. You can use that. Fourth one is calculate identifiable net assets taken over. This will always be at fair values. At fair values. Step number 5. Calculate non-controlling interests. NCI. This is also an accepted abbreviation. And last step is calculate goodwill. Sir, credit हो गया तो two options. Gain on bargain purchase or capital reserve. Gain on bargain purchase or capital reserve. What is gain on bargain purchase? What is capital reserve? What is non-controlling interest? All of them we will be discussing in great detail. All of them we will be discussing in great detail. Okay. Sometimes the questions may come requiring you to prepare the balance sheet as on the date of acquisition. To preparing the balance sheet as on the date of acquisition. So you will follow the 6-step model, calculate the goodwill, and then start to prepare the balance sheet as per schedule 3. Okay. So first you follow the 6 steps, prepare the balance sheet, and then you prepare the balance sheet in schedule 3. Okay. So that is how you would follow the approach. When we do Ind AS 110, there is an alternative way to calculate the goodwill. It will give the same answer as the one that is that you will be getting in Ind AS 103. So you could, once you have the knowledge of 110, you could alternatively calculate the goodwill as per the process described in 110, and then you could prepare the balance sheet, and then you could prepare the balance sheet. Okay, so this is what is going to be there. So we will now discuss each and every step in detail. We will now discuss each and every step in detail. As far as your intermediate was concerned, ये 6 step दिए थे. ये 6 step करते जाओ, करते जाओ, करते जाओ. Go on solving it, and you would ultimately get your answer one or the other day. Okay. So sheer practice made you perfect. It was very scoring in your intermediate, and it was one of the easiest topics. In your final also, the topics are simple, but there are some additional concepts which are there to confuse us, which are there to trouble us. But I think it will be fairly understandable. It will be fairly enjoyable for us to understand. So we move on to the first step, that is identifying the acquirer. Okay, don't write down now, just pay attention. Step 1, give me answers. Who do you think is the acquirer? Who do you think is the acquirer? Identifying acquirer. This is the first step. Who is the acquirer? There is no list for accepted abbreviations as such, but some of them are okay. I mean, we have seen it. Okay. Kaushiki is saying The one who pays the purchase consideration is the acquirer. The one who pays the purchase consideration is the acquirer. Srishti Goyal is telling the one who buys. So obviously both of them are on the same page. One who buys is the one who pays. So that will be the acquirer. Soham is saying transferee. That is obvious. Okay, उसी को acquirer बोलते हैं. Okay, what about others? Nidhi, any other answers? Any other answers? Any other answers? Anyone? Okay, fine. So let us start again with a story. Don't write down. Just sit back, listen and understand. Okay, it will be fairly easy for us to understand. Consider a transaction like this. I have two companies. One is A Limited. One is B Limited. One is A Limited. One is B Limited. Okay. Now, A Limited is having 100% stake, over A1 Limited, B Limited is having 100% stake over B1 Limited. Okay. A1 Limited's balance sheet, if we look, it is something like this. Equity share capital, 1000 shares of rupees 10 each. 1000 shares of rupees 10 each. So this is 10,000. This is 10,000. Fair enough. B1's Limited structure is something like this. Equity share capital, 3,000 shares of rupees 10 each. So this is 30,000. This is 30,000. Now, the deal is something like this. The deal between A Limited wants to buy B Limited. A Limited wants to buy B Limited through A1 Limited. Okay, so what it will tell is, it will tell the owner of B1 Limited, that is B Limited, look, I want to acquire B1 Limited. Please pay attention now. It's very, very interesting. I want to acquire B1 Limited. So B Limited bolega. I'll avoid the words limited. I will just take B, B1, A1. So A wants to buy B1. B1 is owned by B. So B will tell A, ठीक है, you want to buy B1, fair enough. मेरे को बदले में क्या दोगे? What are you going to give me in exchange? So A will tell, कुछ तो देना पड़ेगा. So A will tell, I will give you shares of A1. I will give you shares of A1, and in return, you give me shares of B1. I will give you shares of A1, and in return, you give me shares of B1. All right, agreed. Kitne doge? Kitne doge? So A will tell, look, you are giving me 3,000 shares of B1. I will give you 3,000 shares of A1. I will give you 3,000 shares of A1. So B is perfectly happy with that. He says, यार मैं 3,000 शेयर दे रहा हूं, मुझे बदले में 3,000 शेयर्स मिल रहे हैं. So now 3,000 shares of A1. 3,000 shares of A1 transferred to B. And we all know that any payment which is made to the owners of the target company is purchase consideration. ये मैं नहीं कह रहा, you have studied this. Okay, you have studied this. Any payment made to shareholder is purchase consideration. ऐसा bold में लिख के आपने पढ़ा रहेगा when you did AS 14. Okay, you would have studied payments made to equity PC, payments made to preference shareholders PC, payments made to debenture holders not PC because they are not owners. So this is what you would have studied in AS 14. Now थोड़ा सा different है, but otherwise also the crux remains the same. So this typically becomes your purchase consideration. This typically becomes your purchase consideration. In return, what is B going to give? Simple. B is going to give 3,000 shares of B1. B is going to give 3,000 shares of B1. Have you understood the transaction now? Have you understood the transaction so far? Yes, have you understood this? Okay. तो अभी A issues 3,000 shares of A1. In return, B is going to give all the shares of B1. B is going to give all the shares of B1. So till now, we are able to understand one thing. A went with the intent to acquire B1. So A is discharging the consideration. A is discharging the consideration in the form of shares. तो क्या हो गया? It's perfectly fine to discharge consideration in the form of shares. Perfectly fine. So A has discharged consideration in the form of shares, and in return, B has given shares of B1 to A1. So this is how the transaction is. Post acquisition. Post acquisition, how will A1 look like? A1 Limited looks something like this. A1 Limited looks something like this. Equity share capital. It had 1,000 shares at the beginning. Yes. It has issued 3,000 shares now. It has issued 3,000 shares now. So total, how many shares are there in the capital structure? How many shares? 4,000 shares. 4,000 shares of rupees 10. So total shares in the capital structure is rupees 40,000. Rupees 40,000. Just a second. Give me a minute. All right. Now, who are the shareholders in A1? Who are the shareholders in A1? Sir, एक तो A Limited है. Yes. How many shares are held now? A Limited पहले भी 1,000 shares था, अभी भी 1,000 shares है. But अभी share capital कितना है? Sir, now the share capital is 4,000. So this is a 25% stake. This is a 25% stake. अच्छा. B Limited पहले कुछ नहीं था, but now by virtue of the transaction, 3,000 shares of A1 are held by B Limited. So therefore, 3,000 by 4,000 is equal to 75%. Is equal to 75%. Okay. B1 Limited के केस में, अच्छा, what else will happen? These shares are ultimately moving to A1 Limited. So here I will have investment in B1. 3,000 shares. Now look at the post acquisition structure. Pre acquisition क्या था? A चले थे B को खरीदने, A चले थे B1 को खरीदने. A went to buy B1. Purchase consideration ऐसा था कि ultimately you tell me who has acquired whom. Who has acquired whom? Come on. Answer honestly, considering the stakes. The purchase consideration was directed by A to B. Post acquisition scenario, B is holding 75% shares in A1, A is holding only 25%. You tell me who is controlling what? Who is controlling what? B has acquired A1. B has acquired A1 is what Kaushiki has said. Srishti has said. Okay. Is what Kaushiki has said, what Srishti has said. Yes. Any other answers? Any other divergent answers? Any other different answers? Soham, Sumit Jain, Aniket Jain, what do you guys think? B is controlling A1. All right. So that is again what Srishti, Kaushiki and Soham has said. No one is controlling B1. That is not right. That is not right. See, let us now understand. I am having A1 Limited, A Limited 25%, B Limited 75%. So who is controlling A1? B. A1 is having 100% stake in B1 Limited. A1 is having 100% stake in B1 Limited. So A1 will control B1, but A1 is controlled by whom? Sir, A1 is controlled by B. So can I say that indirectly B is still controlling B1? Can I say that indirectly B is still controlling B1? Yes, sir. तो बेटा A ने क्या किया? A has made an offer to acquire, but by virtue of the acquisition that has taken place, it is not A who has gained the control. It is ultimately the B Limited company that has gained the control over A1 without losing the control over B1, without losing the control over B1. So B earlier controlled B1 directly. Now B is controlling B1 indirectly through A1. B is controlling B1 indirectly through A1. So therefore, conclusion. Pre-acquisition and on the other side you have post-acquisition. All right. A1 Limited. Pre-acquisition A Limited control was 100%. Post-acquisition B Limited 75% control. A Limited 25%. This becomes a minority interest, which we call as non-controlling interest, B1 Limited. Earlier, who was controlling it? B Limited. Control 100%. Now, who is directly controlling it? A1 Limited. 100% control. But who controls A1 Limited? Ultimately, B Limited. Ultimately, B Limited. Okay. All right. जो है वो भी चला गया. What is there, that also went off. So these type of acquisitions are typically known as reverse acquisitions. These type of acquisitions are typically known as reverse acquisitions. Okay. So अब के बाद, now when we always solve the questions, it is not just a plain reading of who has paid the PC is the acquirer. No. You will obviously have to analyze what is the post-acquisition capital structure. And when you analyze that, you will come to know who is the actual acquirer. Who is the actual acquirer? So A Limited is not A Limited. One second. A1 Limited. Legal acquirer. Why legal acquirer? Sir, ultimately A1 has got the shares of B1, right? So if you see, A1 is having investment in B1. So legally speaking, A1 is the legal acquirer. But in substance, what is happening? Sir, A1's control is getting transferred. So therefore, this becomes accounting acquiry. Acquiry bole to target. Acquiry meaning the target. So A1 Limited. If you look at B1 Limited, apparently it looks like B1 is having a loss of control. So it becomes legal acquiry. But in perspective, it ends up being the acquirer because ultimate ownership of B1 does not change. Ultimate ownership of B1 does not change. And therefore, B1 continues to be the accounting acquirer. So this is how the transaction is going to get structured. This is how the transaction is going to get structured. I had a question, sir, are these transactions always based on shares percentage and not on the BOD and its control? See, obviously, Srishti, one thing you have to understand, when I speak about practical, now see, there is a difference between theory, there is a difference between practical. Practically, there are huge number of factors you have to consider when we speak about control. Board of directors composition is one of the major factors we will obviously evaluate when we have to decide who has the control. Okay. But for academic purposes, agar kuch bhi nahi diya hai, if nothing else is given in the question, purely take the stake, and those who have the majority stake, that is more than 50%, that entity will be the acquirer. Okay. Plain simple as it is. Is it okay? Have you understood this part? Have you understood this? So here acquirer is B1 Limited through B Limited. Okay. So this is what is your okay. So what is the legal accounting and acquirer acquiry? Can you please explain again? See, पहले क्या था? Look at A1 Limited before. A1 Limited did not have any investment. After the transaction, A1 Limited got investment in B1. So can I say that legally speaking, the form of the transaction, A1 has acquired 100% stake in B1. A1 will acquire 100% stake in B1. And because A1 acquires 100% stake in B1, legally speaking, the form of the transaction indicates that A1 has acquired B1. So this becomes, in this case, A1 becomes the legal acquirer. So I hope this part is clear. A1 is the legal acquirer. But actual mein what is happening? In reality, A1's, the control over A1 was earlier with A. Now the control has shifted from A to B. The control has shifted from A to B. That means B1 was earlier controlled by B. Now also it is controlled by B. B1 was earlier controlled by B. Now also it is controlled by B. So there is no difference in the control as far as B1 is concerned. So B1 has not suffered a loss of control in the first place. B1 has not suffered a loss of control in the first place. In fact, B1 is controlling A1 through B limited. B limited is now having direct control over A1, and therefore, if I look at B1 limited, पहले भी B था, later on also it is B. So B1 के case में there is no change. There is no change in the case of B1. So therefore, A1's control is getting shifted. So A1 becomes the acquiree. B1's control is the same. It is controlled by B before also, after also. But साथ में झोली में क्या आ रहा है? A1 is coming. So A1 becomes your acquiree, legally speaking. But from an accounting perspective, it is going to be the acquirer. Now the question arises, sir, consolidated financial statements कौन बनाएगा? Who will do the consolidated financial statements and how will it be presented? उसके लिए we will dedicate 2 hours in the class on Saturday. We have a beautiful question on reverse acquisition. We have a beautiful question on reverse acquisition where a lot of concepts will start dancing in front of us. Okay, what we thought is happening, what we see is happening, there will be a lot of upar niche, but we will post that, we will park it separately, because before that I need you to understand how to prepare CFS, how to record it. So we will park the reverse acquisition consolidation later on. You will understand why it is different, what is different. There are so many things which are happening. So therefore I don't want to confuse you more than you already are confused right now. Okay, so we will park this later. So essentially when we talk about identifying the acquirer, it is not the person who pays the purchase consideration. Aniket Jain had said, I think, or Sumit Jain had said, the one who acquires the control is the acquirer, which is exactly what we mean when we do the first step. So in the first step, we will be looking at the entity which acquires control, the entity which acquires control post the business combination. जिसके पास business combination के बाद control है, that entity will become the accounting acquirer. That entity will become the acquirer. Yes, we will not only look at the form, we will also look at the substance also. Okay, so we will move to an accounting of substance over form. Okay, see, 99% of the problems will be straightforward. 99%. Kabhi koi attempt mein, God knows you would have done something in your previous life. So because of that, institute has asked you reverse acquisition in your examination. तो उस 1% के लिए, that 1% depends on what you did in your past life. Okay, so that for that 1% you will have to evaluate pre-acquisition control, post-acquisition control. Okay, so that is what is the probability of this coming. I don't think it has been asked till now in the examination, but it is a highly probable question. It is a highly probable question. वो कभी भी आ सकता है. It can come at any point of time. Okay, so therefore you will have to be prepared for it. We'll do that. Don't worry. All right. So now you are having identifying the acquirer. Okay, identifying the acquirer. What I'll do is we just write a couple of points in brief, and then I want you to just draw this transaction so that you can understand, you can know that there is the chance of a reverse acquisition that exists. Okay, we'll write small note, then I will write a small note on reverse acquisition as a part of this, and then you can draw this structure. So that takes care of the first step. That takes care of the first step. Okay, so write down this one, this point. Just below step 1, write down the acquirer refers to the entity which obtains control post business combination. Which obtains control post business combination. Usually it would be the entity paying the purchase consideration. Like all of you had said in the beginning, जो PC दे रहा वही acquirer है. Usually that is right. Okay. However, the following factors need to be considered. First one, relative voting rights in the combined entity post the business combination. Second, as Srishti had rightly said, we will also look at composition of board of directors, senior management, post the business combination. Post the business combination. Generally, acquirers, shareholders would own larger proportion of voting rights and the acquirer would usually take key management roles in the combined entity. So this is what is about identifying the acquirer. Identifying the acquirer. Okay. Okay. Have you noted this down? Have you noted this down? Okay, Srishti has confirmed. Yes, are you guys able to follow? Okay, done. All right, fine. Below this, you can give the heading. It's part of the same step. Reverse acquisition. Reverse acquisition. Reverse acquisition. In these cases, comma, the legal acquirer is in substance the accounting acquiree and the legal acquiree is in substance the accounting acquirer is in substance the accounting acquirer. In these transactions, comma, in these transactions, comma, the control of the legal acquirer is lost, whereas the legal acquiree continues to be ultimately controlled by the same shareholders, implying no loss of control. We saw that B1 before also was controlled by B. Thereafter also it was controlled by B only. So there is no loss of control. There is no loss of control. Done. Okay. So Kaushiki has confirmed. The others. Yes. Okay. Nidhi also has confirmed. All right. Okay, fine. So come back to this. Example. A1 Limited acquires 100% shares of B1 Limited from B Limited by issuing its own shares in the ratio 1:1. Okay. So you can give legal transaction. Okay, so legal transaction. Have you noted the legal transaction? Then you will be having substance of the transaction. Substance of the transaction. Yes, investment in B1 in books of B will cease to exist, but control over B1 continues. It's just that it is routed through A1. Okay, so earlier it was B controlling B1. Now it will be B controlling A1 controlling B1. So in the real substance, there is no change. Have you noted substance of the transaction? Yep. Have you noted, guys? I'll proceed to the next one. Yes. Okay, you can just write this part down. Okay, so you can write this part down. If you want, you can write this chart, the first one. Otherwise, you can directly move to the conclusion and write pre-acquisition, post-acquisition. Noted. Conclusion. Okay. Now the question is, sir, इतना सब मेहनत करने के बाद, after doing all this, भाई मिला क्या अपने को? What is the benefit of doing all this nonsense? ओके वो ये अजीब ही तो लगता है ना, वी कॉल इट लाइक दैट बिकॉज क्या भाई सर सीधा सीधा चलना चाहिए लाइफ में, ए एक्वायर्ड बी तो ए बिकम्स आवर पेरेंट, यहाँ तो उल्टा ही चल रहा है, ए ने एक्वायर किया और ए का कंट्रोल चला गया, बी ने एक्वायर नहीं किया लेकिन बी पेरेंट बन गया। तो ये सब करने से व्हाट आर वी अल्टीमेटली अचीविंग, मिल क्या रहा अपने को? So let us assume that this would be an amalgamation, not share transfer. This would be an amalgamation scenario. So let us also assume that A Limited is a listed small entity, B Limited is an unlisted big entity. Okay. See, ideally क्या होता है, B should acquire A because B is bigger, A is smaller. So ideally B should acquire A. But if B acquires A तो listed था, A is listed, B is unlisted, A is listed, B is unlisted, तो problem क्या होगा? If B had to acquire A in an amalgamation kind of a thing, absorption kind of a structure, A would shut down and B would remain unlisted before the acquisition also, after the acquisition also. Instead, what B tells is, it identifies A and it tells, beta, A, you acquire me. I am the bigger entity. In substance, I will take control over the business. इस बहाने मेरा क्या होगा? I am getting listed on the stock market because A is ultimately acquiring B, where A is the listed small entity. B is the unlisted big entity. So by virtue of a reverse acquisition, A legally acquires B, but in substance, it is B which is acquiring A, and therefore B is ultimately getting listed on the stock exchange without having to go through the hard process of issuing a prospectus, inviting subscriptions, finding underwriters. All these things can be avoided and it can attain a listing just by virtue of reverse acquisition. Okay, so these are known as backdoor listings. Okay, हमने पीछे के दरवाजे से स्टॉक एक्सचेंज पे लिस्टिंग कर दिया. ओके, सो दैट इज वन ऑफ द बेनिफिट्स वी कैन सी ऑफ रिवर्स एक्विजिशंस. ओके, सो दिस इज हाउ you would have to work. This is how you will have to understand. Okay, so now the question is, so typically रिवर्स एक्विजिशन आपको सीधा सीधा क्वेश्चन में बताया नहीं जाएगा कि दिस इज अ प्रॉब्लम ऑन रिवर्स एक्विजिशन. यू विल हैव टू आइडेंटिफाई whether there is a reverse acquisition or not. So typically this would be a hidden adjustment. Okay, this would be a hidden adjustment. You will have to do it. Okay, you will have to evaluate it first in the post acquisition what is going to happen, and then you will have to do the calculations accordingly. Have you understood identifying the acquirer? Yes, sure, everybody understood. So then we move on to step 2. These are small steps. Okay, step 2, date of acquisition. Step 2 is date of acquisition. अच्छा, see, acquisition is not like चलो हम लोग आज कंपनी खरीदेंगे and आप you make an offer, the directors will accept right now, the shareholders of the target company will accept right now and हो जाता है. ये सब चीजें ना एक दिन में नहीं होते. All these things do not happen in one time. All these things do not happen on a single date. There are huge number of transactions, events which will happen. So the series could go something like this. So the acquirer will identify the target. The acquirer will make an offer to the target. If the directors of the target agree in principle, then so before making an offer, the acquirer would express its intent to the target. After that, it would perform a due diligence on the target. After making a due diligence, it signifies its interest and makes an offer to the target company. The target company's directors will receive the offer, will review the offer, but directors do not control. Control is with the shareholders. So directors will take the offer and place it before the shareholders. The shareholders will give their approval, may not give their approval, whatever be the case. So those who do not give the approval, if they're minority shares stakeholders, probably you will have to satisfy them in some other way, like giving them cash, extra cash. They are known as dissenting shareholders, which you would have studied in your intermediate. So the dissenting shareholders would have to be taken care of. Once they are taken care of, the remaining shareholders will accord their approval for the transaction. This approval would ultimately flow back to the entity, the acquirer. The acquirer would then issue the purchase consideration and get the shares or the net assets in its name. So now of all these dates, when is the date? What is the date of acquisition? Is it the date when intent was given on the first day? Is it the date when the due diligence was completed? Is it the date when the board of directors received the offer letter? Is it the date when the shareholders, dissenting shareholders, were paid off? Is it the date when shareholders granted the principal approval? Is it the date when the PC was actually paid and the shares were actually transferred? By what is the date? What is the date? You have 6 to 7, 7 to 8 dates. In this case, what will be your date of acquisition? So the answer is simple. The answer is the date when you pay the PC and get the control, or the date when you pay the PC and get the net assets. That is the date of acquisition. See, it will be a quid pro quo. आप एक हाथ से दोगे consideration, दूसरे हाथ से आप control लोगे. So it will be a quid pro quo transaction, and therefore the date when these transactions happen will be regarded as the date of acquisition. Will be regarded as the date of acquisition. तो ये हो गया general. This is becoming your general case. General case, what is the thumb rule? The date when you pay the PC and get the control, or the date when you pay the PC and get the net assets. That is the date when you are going to get the that is the date which will be regarded as the DOI. All other dates, shareholder approval, director approval, due diligence date, ye wo, offer letter, all those dates are not required. They will be just kept to confuse you. Okay. Why is date of acquisition important, by the by? Date of acquisition इसलिए important है because goodwill arises. Goodwill is born on the date of acquisition. What is goodwill? Sir, goodwill, you also know, I also know what is goodwill. Goodwill is excess paid over the net assets acquired. Excess paid means purchase consideration over the net assets acquired. So you will need to identify the net assets on the date of acquisition. So date of acquisition is a very, very important date from the perspective of identifying goodwill. देखो ultimately हमें जानना है all our adjustments, all our transactions are from the perspective of the last step, which is calculating goodwill. Last step actually 2 line का ही है सिर्फ. Last step is actually 2 to 3 lines. That's it. I don't have to explain anything in the last step. All my explanations will happen in the first 5 steps. So date of acquisition is of significance because that is the date when you will perform fair valuation of net assets. That is the date when the goodwill is actually getting born, and therefore it is of great significance that we get this date correct. So it is the date when PC is paid and you are going to get control. You are going to get control. Shareholders approval, directors approval, date of offer letter, what you can say, the date when dividend starts to accrue. All these dates are not required to be looked at. In the question, you will have to hunt for the information which says that control has passed on to the acquirer. Sir, control nahi diya, shareholding diya, then you can assume that shareholding implies control. Nothing wrong in that. If they have not given control is transferred on this date, but in place of that, they say the shares are transferred on this date, then the date when such shares are transferred is a sufficient understanding that that date is the date when the control is actually transferred. Okay. Sometimes what happens, you could be having your acquisitions scrutinized by regulators, So these regulators could be of two types. The first one could be entities which actually scrutinize your acquisitions, and they have to give a decision on whether to allow the acquisition or not. For instance, in today's times, suppose Ola and Uber join hands to form a single entity that is in the business of flying taxis, app-based taxis. So Ola and Uber join hands. Now, this transaction will obviously go before the Competition Commission of India. Why? Because there is a huge risk that when these two companies join hands, they could create a monopoly. And by creating a monopoly, they could influence the market the way they want, which is not beneficial to the consumer. And therefore, the Competition Commission of India can reject such acquisition, So therefore, the date of acquisition in case of regulators who have the power to decide on whether an acquisition should happen or not, then the date of acquisition will be that date when such regulators grant their approval to a transaction involving business combination. Agar it is a regulator which merely needs some information. For example, if you are acquiring shares in another entity, you may have to do some ROC filing. And because you are doing some ROC filing, the question is, does the ROC decide whether acquisition should happen or not? वो ROC का काम नहीं है. ROC का काम procedural है. ROC will tell you have acquired, fine. I'm not going to ask why you acquired, what you acquired, how much you paid. All I want is all the documentation relating to this acquisition needs to be filed with the ROC, needs to be filed with the registrar of companies. So in this case, the regulator is not deciding on an acquisition. It is going to decide ultimately. It is just asking for information. It is just plain information sharing. So therefore, the date agreed in such cases between the parties is your date of acquisition. Is it okay? Yes. So this becomes important. Why? Because you have to identify when the control actually transfers. Is it okay? Yes. Have you guys understood? Okay. Yeah, reverse acquisition is a bit tricky. Yes. But क्या करे, कुछ तो नया सीखना पड़ेगा ना. वही चीज करना है, then what is the fun in that? Okay. So you can write here, it refers to the date when acquirer obtains control over the acquiry. First one, generally it is the date when acquirer discharges the purchase consideration and acquires net assets. Or control. Closing date. Okay. Dates of board approval, offer letter, shareholders approval are irrelevant. Second, acha. See, in certain cases, control may be transferred before the PC is discharged. So typically when companies are mismanaged, okay, what the shareholders will tell is, you come and take control of the affairs. हमें कोई problem नहीं है. You can pay us the PC later on. Okay, you can pay us the PC later on. So if parties agree to an early transfer of control, then such agreed date would be the date of acquisition. Where parties agree to earlier or later date of transfer of control, such mutually agreed date would be the date of acquisition. Third, date of dividend accrual is irrelevant. Is irrelevant. If acquisition is subject matter of a regulator, It could be something like Competition Commission of India, in which case we say that the process is substantive, and therefore once the party, the regulator gives the permission, then that would be the date of acquisition. Regulator's approval is substantive. That is, regulator has power to cancel the acquisition. DOA is the date of regulatory approval. Okay, here regulatory approval is procedural and not substantive. Date agreed between parties is the date of acquisition. Yes. Noted? Yes. See, there are a lot of case studies on this. Please go through them. Okay, please, it's a request. Please go through those questions, because if I sit solving those questions, we'll end up losing a lot of time. It's all theory based questions. Okay, most of the theory we've already done. So I don't think you should have any difficulty in those theoretical questions. Okay, so please go through those questions. I'll try to. There is a lot of theory in this standard. Lots means lots. Okay, so I have to discuss the theory because it is important. I'll try to do some questions, but I think the possibility of that would be only on Saturday. Okay, maybe on Thursday, let us try, but I cannot guarantee. But on Saturday, 1 or 2 questions we should be in a position to solve. Okay, I'll be picking up various examples to explain. Basis those examples, you will be in a position to try the study module questions. So my request is please try the questions and come. I know it's a hectic time for all of you. It's end of the year. Yes, but please try the questions and come. Okay. All right. Coming to the next and the most important step of all the 6. Step 3. Determination of PC. Determination of PC, purchase consideration. Of all the 6 steps, steps 3 and 4 are extremely important. Steps 3 and step 4 are extremely important. Step 5 is new. Okay, so that is why it is important. Okay, 1 and 2 तो मतलब इतने कुछ खास नहीं थे. Okay, so step 3, determination of purchase consideration. अच्छा भाई, what is the purchase consideration? Sir, it is the consideration that you pay for acquiring control. Okay, so when you are acquiring control, to whom are you going to make the payment? To owners of the target company, to owners of the target company or the selling company. Okay, now when I have to make the payment to the owners of the selling company, will it only mean the shareholders? Will it only mean the shareholders? Or can it include preference shareholders? Sambhal ke dena, give the answer properly. When I have to talk about what comprises the purchase consideration, should I also include payments made to preference shareholders, or should I exclude it? Should I include payments made to preference shareholders, or should I exclude it? Okay, so yes, approval is substantive. PC is just a payment, no, Soham. So PC is not important. Okay, all right. So all of us are saying that include both equity shareholders and preference shareholders in identifying what is your purchase consideration. Abhi, just a couple of weeks ago, you studied one of the most important standards, that is financial instruments. In India, typically Companies Act allows you to issue only redeemable preference shares. Only redeemable preference shares. Okay. And redeemable preference shares in terms of Ind AS 109. Not talking about necessarily convertible. I'm talking about mandatorily redeemable preference shares. Okay. Mandatorily redeemable preference shares as per Ind AS 109 meet the definition of a liability and not that of equity. So when I am doing my business combination under Ind AS, I have to ensure that I look at the concept of who is my equity, who is not my equity, in line with Ind AS 109 as well as other standards which you would have covered. And therefore, if preference holders are a financial liability, if preference shares are classified as a financial liability in accordance with Ind AS 109, वो तो इक्विटी नहीं होगा. And if it is not equity, any payment made to preference shareholders, purchase consideration कैसे हो सकता है? नहीं होगा वो purchase consideration. So therefore, your payments can be made to preference shareholders, agreed. But since they would be classified as financial liability, payments made to them will not form part of the purchase consideration. Payments made to them would not form part of the purchase consideration. अच्छा, एक और बात करते हैं सर. आपने हमें बता दिया कि प्रेफरेंस शेयर होल्डर्स तो नहीं होंगे हमारे परचेस कंसिडरेशन में. तो एक स्टेप आगे बढ़ते इसका ऑपोजिट देखेंगे. You, target company, could have issued employee stock options. Yes, sir. These stock options are not yet exercised. These stock options are not yet exercised. हमने शायद 102 पढ़ा था एक जमाने में. ओके, These stock options are not yet exercised. Lapse भी नहीं हुए because exercise period आया ही नहीं है. वो अभी भी vesting period में. The stocks are getting vested. तो द स्टॉक्स आर गेटिंग वेस्टेड, मतलब आप एंट्री कौन सा पास करो? वो जर्नल एंट्री आर पासिंग. सर, वी पास द एंट्री एम्प्लॉय बेनिफिट एक्सपेंस अकाउंट डेबिट टू शेयर बेस्ड पेमेंट्स रिजर्व, because what you are giving is stock options, option to acquire equity shares. So in your capital structure under the head equity, you will be having something known as SBP reserve. Will be having something known as SBP reserve. SBP reserve represents the payments that will be made in the form of equity shares to the employees of the company. Correct? And if you are going to make the payment of in the form of equity shares, in the form of known number of equity shares, then it becomes my equity. It becomes my equity. And because it becomes my equity, any payments which are made to the employees of the target company to whom stock options are granted, such payments would also become my purchase consideration. Such payments would also become my purchase consideration. Okay. So therefore, this is how you will analyze the purchase consideration. वो कैसे calculate करना, क्या करना? Don't go into that immediately. Okay, we will do that step by step. But first thing is, don't restrict your understanding to only equity, preference, and all. No. Now you have come to Ind AS. So all components of equity and financial liabilities you have to identify. जो पेमेंटेज आ रही है फाइनेंशियल लायबिलिटी के लिए, दैट विल नॉट बी इंक्लूडेड इन द पीसी. पेमेंट्स व्हिच आर फ्लोइंग टू दोज हु आर क्लासिफाइड एज इक्विटी, that will be included in your purchase consideration. That will be included in your purchase consideration calculation. Okay, so what is PC? You can note this down. You can note this down. Fair value of consideration. Agreed to be paid to the owners of the selling company. To the owners of the Drishti, I didn't get your question. Current liabilities कहाँ consider हो रहे हैं? They are not considered. Payment made to current liabilities will not form part of purchase consideration. Preference shares, if they're classified as a financial liability, they will not form a part of purchase consideration. Okay, so I didn't get your question. Please let me know. Okay. Fair value of consideration agreed to be paid to owners of the selling company. Owners of the selling company is not restricted to equity shareholders, is not restricted to equity shareholders, but covers all instruments classified as equity. Example, ESOPs. Example, ESOPs. What is fair value of consideration? We'll come to that. We will come to that. Okay. Okay, note this down. Therefore, payments made to preference shareholders which are classified as, definitely share warrants, everything, every component of equity. Okay. Payments made to preference shareholders which are classified as financial liabilities would not form part of purchase consideration. Okay. Srishti, we will consider preference shares as a part of liabilities when we calculate net assets. Okay, so there it will be considered, but not in the calculation of purchase consideration. Not in the calculation of purchase consideration. Okay. All right. Ignoring. Okay, 1 second. P we will use for purchasing company. S we will use for the selling company. Okay, so assuming P Limited acquires 100% stake in S Limited through a single transaction. Ignoring NCI, step-up acquisitions, comma, PC can be computed as under. PC can be computed as under. PC can be computed as under. Okay, so yeah, Srishti, hope you understood. Okay. PC can be computed as under. Okay. And now we come to the transactions. Okay. Payments made to equity shareholders नहीं लिखेंगे, we will write it as components. made to equity components. अच्छा, what will be the payment? Sir, payment cash हो सकता है? Yes, बिल्कुल हो सकता है. So cash paid. Payment could be in the form of cash. बिल्कुल. So if payment is in the form of cash, if payment is in the form of cash, cash paid will be your purchase consideration. Cash paid will be your step up aayega. I have just excluded, means I have just made you write that, but we will cover step up towards the later part. See, ideally I would have taught you, explained you step up right now, but time के वजह से, otherwise I would have explained. As of now, step up, just understand step up में क्या होता है. You are acquiring छोटे amounts, 10%, 15%, 20%. ऐसे करते करते the you acquire more than 50%, that becomes your acquisition. So acquisition by way of successive purchases, उसको हम लोग बोलते हैं step up acquisition. In fact, since you brought this topic, see, typically step up acquisitions kabhi kabhi kya hota hai, it happens in hostile takeovers. Okay, I don't know if you are sure or not, if you've read or not. A couple of years ago, Larsen and Toubro acquired a company known as Mindtree. Larsen and Toubro acquired a company known as Mindtree Limited. It was a classic case of hostile takeover, the first of its type in the IT sector in India. Okay, so Larsen and Toubro, what it did was, it first acquired a small percentage in one financial year in the month of January. Then it acquired another stake from, if you remember, there was this Cafe Coffee Day owner, Mr. Siddharth, who had a substantial chunk of shares in Mindtree. So L&T went to Siddharth and it acquired the shares of Mindtree from Siddharth. Okay, so on this day, till now the Mindtree controlling shareholders did not know that unke piche ye sab chal raha tha. So L&T took a small percentage from the market, then it took the shares from Siddhartha Cafe Coffee Day, and then once it had about 40-45%, you'll have to look at the percentage which is prescribed by SEBI. Once it had that threshold percentage, what L&T did was, it made an offer to public. Ki we want to acquire Mindtree, we are having the threshold equity shares, and now we will make an offer to the public that we are going to acquire the shares of Mindtree. The shares of Mindtree were trading at some 12, whatever, I don't remember, but it made an offer at 1800, which was substantially higher than the current market price. And that point of time, the original owners of Mindtree, they woke up from their sleep. Okay, because then they saw that their shares, their shareholding is at risk. But the public perception of L&T is very good. Okay, L&T is a good company. So what happened was, when they came out with a public offer, most of the, I mean, a sizable chunk of public gave up their holding in Mindtree. That was sufficient for L&T to get control over Mindtree, because L&T with the open offer acquired about 60 to 65% shares, okay, in Mindtree. That was sufficient to have its own board of directors. It became quite acrimonious towards the end. Okay, it became dirty. People, the existing shareholders, they started to blame L&T, blah blah blah. All of that happened. But at the end, the moot point, what we have to understand is, in the preceding financial year, the stake of L&T in Mindtree was not 50%. So therefore, L&T could not consolidate Mindtree. The moment the public offer was made in the next financial year, in the month of June, when it got the shares, from that day onwards, it started to consolidate Mindtree. So this is known as step-up acquisition. This is known as step-up acquisition. वो है, वो आएगा हमारे इसमें. Okay, we will be having that case also. Okay, we have a problem, but for now just park it aside. Okay, so you can make the payments in cash. Sir, cash nahi, we can make the payment in equity shares. Definitely kar sakte ho. Can we make the payment in debentures? Yes. Can you make the payment in preference shares? Yes. In any security, you can make the payment. Okay, so add fair value of shares, debentures, other securities. So hum look at the words I am using at the beginning of each line. I am using the words fair value, fair value, fair value at each point of time. That is why we call it as consideration at fair value. Okay, that was the words which we used now. Fair value of consideration. Okay. Cash paid is always at fair value. Uska koi aur value nahi rahega. What you pay is fair enough. Okay. So cash paid, add fair value of shares, debentures, other securities issued, etc. Add. Acha. Sir, can I pay in the form of non-cash assets? Can I pay in the form of non-cash assets? Definitely you can. So fair value of assets other than cash transferred. Fair value of assets other than cash transferred. So this becomes note 1. Okay, so what I want you to do is leave about half a page. Okay, for this we will be having various items that are going to come. Okay, like deferred consideration, contingent consideration. Okay, stock options. So leave about half a page. All those line items will come. And each of those line items, we will be discussing it separately. So that is why I'll be giving you note 1, note 2, note 3, etc. Okay. So overall for this payments made to equity components, about half a page is needed. Okay. I leave the full page so that I can discuss it with you. Note 1, fair value of assets transferred. Assets transferred other than cash as a part of purchase consideration. Okay. Now see, suppose you are having purchasing company. In its balance sheet, it is having land. This land is having a value of, is having a book value of 10,000. This is at cost. This is at cost. Fair value of this land is 40,000. Fair value of this land is 40,000. Okay, fine. Now, P Limited wants to acquire 100% in S Limited. Wants to acquire 100% in S Limited. Okay. All right. So S Limited's equity share capital, S Limited's equity share capital is worth 10,000. That is 1,000 shares into rupees 10. Profit and loss is worth 15,000 and net assets is worth 25,000. तो ऐसा छोटा सा बैलेंस शीट है एस लिमिटेड का. ओके, this is a small balance sheet of S Limited. Okay, now see, ultimately I told you each and every adjustment must be from the perspective of the last step, that is goodwill. Okay, so think each and every step from that perspective. Okay, now the transaction goes something like this. P is going to transfer the land. बदले में क्या मिलेगा? The entire share capital of S Limited will come to P. Okay, so 100% stake is being transferred. Land will go to whom? Land will go to owners of S. So land will not come in S Limited's balance sheet. Land will go to owners of S. Okay, so therefore, the transaction looks something like this. P Limited, S Limited, land. Carrying amount is 10,000. Fair value 40,000. Badle mein what is being transferred? Business of S. So net assets of 25,000. Net assets of 25,000. Okay. Now the question is, how am I going to account for this? How am I going to account for this? Okay. So now, what is P getting? P is ultimately getting net assets of S. Okay, so this is net assets 25,000. Fair value of this is 35,000. Okay, fair value is 35,000. Okay, so now net assets of S Limited debit. Ultimately, it's acquiring the net assets. So this net assets will be taken at fair value of 35,000. You would have studied this in AS 14 also. Record the assets at fair value. If not fair value available, assume that book value is equal to fair value and do the accounting. Okay. So net assets of S Limited account debit 35,000 to land. Sir, land to mere books mein it's appearing at 10,000. So we will write it as 10,000. We will write it as 10,000. Okay. And ho gaya na, so I got net assets of 35 and I paid only land worth 10,000. So technically I should have a capital reserve of how much? 25,000. I should have a capital reserve of 25,000. I should have a capital reserve of 25,000. Yes, so this is what we will be tempted to do the moment we see this question. Because apne ko malum hai, sir, apne ko kya malum hai? Sir, we know one thing, that these net assets are having a fair value of 35,000. And acquisition mein whatever assets are going to come, that will happen at a fair value of So I will record them at 35,000. I will record land at 10,000 because ultimately I'm going to give up my land. In my books, land is appearing at 10,000. In my books, land is appearing at 10,000. So I will be having a capital reserve of 25,000. Abhi mere ko batao, you tell me now, is this correct? Is this correct or is this wrong? If it is wrong, what is wrong in this? If it is wrong, what is wrong in this? Okay. Soham is also feeling it is misleading. Kaushiki is saying this is not correct. What about others? What is wrong? I want you to pinpoint and tell by keeping your solution based on the fact that we have to do the calculation of goodwill, which is part 6. All of you know how goodwill is calculated. It is taken as a balancing figure. Okay, so Kaushiki is telling there should be goodwill of 5,000. Okay, Sumit Jain is saying it is incorrect because fair value of land is 40,000. Sir, if any PP is given, it should be recorded at a fair value of 40,000. Absolutely right. Absolutely right, all of you. So now, if I take this land at 40,000, I will get goodwill of 5,000. Is this correct or still there is something wrong? Is this correct or still there is something wrong? Is this correct or still something is wrong? Yes, all of you have given right answer. Nidhi, Soham, Sumit, Kaushiki, Srishti, everyone is saying that land should be at fair value. But here, is there something wrong? Yes, it is giving rise to a credit balance. If you take the net impact, land is having a 30,000 credit. Land is having a 30,000 credit. Accounting wise, the first entry made sense. Net assets of S Limited debit 35 to land 10,000. So land would become 0. I would be left with capital reserve of 25,000. But it was not giving me the true picture. So what all of you said, we will take land also at fair value. मैंने land भी fair value पे ले लिया, then I'm having a negative land in the sense that land is having a credit of 30,000. So what Ind AS 103 tells us, now we will need guidance from 103. 103 tells you have decided to make the payment in the form of non-cash assets. Correct. So since you have made payment in the form of non-cash assets, it has to be recorded at fair value. Sir, why so much insistence on fair value, fair value, fair value? Reason is simple. Goodwill is a balancing figure. Goodwill is a balancing figure. You would have studied long ago, जब partnership किया था, all those chapters which you did, you would apply average profits, you would apply purchase of super profits, you would do capitalization of super profits, you would apply weighted average profits, you would apply annuity method. All these methods would be used to calculate goodwill. All these methods would be used to calculate goodwill. अपने को याद है how we used to calculate using the super profit method? We would take some capitalization rate. This would be the average profit. We would take the expected profitability in the future years. And then we would arrive at valuation of goodwill. You remember we used to do this. Fortunately, you people have studied Ind AS 113. Unfortunately, I was the one who taught that to you. So I know what I have taught. Tell me one thing, goodwill measured using super profit method, goodwill measured using whatever capitalization of average profits, weighted average profits, or goodwill measured using annuity method. In all these cases, the inputs which we were using, would they be level 1 inputs, level 2 inputs, or would they be level 3 inputs? Would they be level 1, level 2, or level 3? You remember the goodwill which we used to record using the computation of goodwill? Yes, come on, tell me. What would it be? Would that goodwill be level 1 input? Would it be level 2 input or level 3 inputs? All of them would be level 3 inputs because we are estimating profitability. We are estimating some rate for normal profits. We are estimating only 5 years purchase. Basically, at every step, there would be an abstract input, a level 3 input in terms of Ind AS 113. So the goodwill that you would have recorded, if it had to be computed, would be totally based on level 3 inputs. Classifying it as fair would be very difficult. So therefore, we then come to the topic that we are now discussing. अपने को चाहिए goodwill at a fair value. Goodwill at a fair value. So goodwill हम compute नहीं करेंगे. Ultimately, what is this goodwill? This is the difference between what you paid versus what you got. What you paid if you keep it at fair value, what you got if you keep it at fair value, and you do the subtraction of both of them, ultimately what remains is also going to be at fair value. And this is why Ind AS 103 focuses on net assets, focuses on purchase consideration. It focuses on these two things, and every time it hammers that these transactions should happen at fair value, should happen at fair value. Later on, we will see in step number 5, non-controlling interest. That also will be at fair value. It will be either at fair value of NCI, or it will be at a proportion of net assets of the subsidiary, which is already appearing at fair value. Ignore these statements. We'll come to that in step number 5. But every step, we are focusing on ensuring that these figures are fair. Because goodwill ढूंढने का तरीका कुछ है नहीं हमारे पास. We don't have any methodology to get goodwill as a fair value. And therefore, आसपास के जो कुछ भी चीजें हैं, we will keep that in fair value. आसपास means goodwill के ऊपर जो debit है, goodwill के नीचे जो credit है, we will try to bring them to fair value. And once these two things are at fair value, ultimately what goodwill we are going to get, that will be arriving at a fair value. And this would give a lot of comfort to the preparers, to the auditors, as well as to the readers. So moving forward, when we look at net assets acquired, we will also record those assets which are not there in the balance sheet of S Limited. We will record those liabilities which are not there in the balance sheet of S Limited. Why? Because they represent unidentified assets and liabilities for the purpose of standalone financials. But for the purpose of business combinations, they are identified assets. And since they are identified assets and liabilities with the attributable fair value, we will disclose them separately. The ultimate intention is my goodwill should represent unidentified asset. Goodwill is an unidentified asset. Unidentified asset means it is the excess payment over the net assets that you have acquired. So net assets to acquire kiya, our intention is to make that portion as clear as we can. So the goodwill value jitna chota hai, utna better है सबके लिए. That is always what is going to be in the intention of the preparers as well as the intention of the auditors also. When you make a huge payment and there is a huge goodwill, obviously the investors will ask कि भाई आपने ये कंपनी में ऐसा क्या देखा जो आपने इसे acquire किया and जिसका value of goodwill is so high. Obviously readers will ask, why did you pay so much when you got so less? So the intention in any acquisition will always be minimize the goodwill as far as possible. And if you want to minimize the goodwill, you will have to ensure that goodwill के आगे पीछे जो भी items है, they have to appear at fair value and accord it. Okay, so this is why the focus will be on fair value of land. But the problem with this is land is getting a credit balance. So what Ind AS 103 tells us is when you are giving a non-cash asset, the first thing that you will be doing is you will have to revalue that asset. Okay, so when I revalue that asset, in this case land had a carrying amount of 10 and a fair value of 40. So there is an upward revaluation of 30,000. So the entry will be first one, remeasurement. Land account debit 30,000. 2. Where will this go? Two options I'm giving you. Will it go to profit and loss account or will it go to revaluation reserve? I'm giving you two options. Credit kahan pe jayega? Will it go to profit and loss or will it go to revaluation reserve, and why? Okay. Tell me Give me one of the two answers and why. Okay, where will it go? P&L or revaluation reserve? कहाँ जाएगा? Yes, Kaushik is right. It goes to the profit and loss account because once this valuation is done, land is getting transferred. So therefore, the land ceases to exist in the books of P Limited, and therefore we cannot credit revaluation reserve. Reval reserve tabhi hoga. Reval reserve will be there only when it will be the land continues to exist in the books of P Limited. Here I am transferring the land, so therefore we will credit profit and loss account as a gain on remeasurement, as a gain on remeasurement. So first step, remeasure the assets which you are transferring, and after that you will pass the entry for recording the acquisition. You will pass the entry for recording the acquisition. Have you understood? Yes. So note number one, I mean the first adjustment to PC is done. Is it clear? Yes. All clear. So you would have written note one, assets transferred other than cash. This example, I mean, it's not needed, but we can just write what is involved here. Write down first one. Assets transferred as part of PC should be remeasured at fair value in the books of the acquirer. The difference arising on such remeasurement should be taken to the P&L account. Here students have a chance of going wrong. They will take it to revaluation reserve. वो मत करना please. Okay, it has to go to the P&L account and not revaluation reserve. Since the asset is getting transferred immediately after revaluation. Immediately after revaluation. Hence, it is similar to a sale. Okay. And next is the remeasured assets should be taken in calculation of PC at fair value. At fair value. Okay, note this down, please. I'll just I'll not give a break. I'll complete in another 10-15 minutes whatever I have to do today, and then I'll leave you about 9:40 or something like that. Okay. All right. So remeasurement की बात हो गई. Yes. Okay. See, if this had to be not a business acquisition but an asset acquisition, then fair value of asset given up would be 40,000. That fair value would be allocated to whatever net assets you are acquiring. Okay. That fair value would be allocated to the net assets acquiring if their fair value is not reliably measurable. As a result, what you are giving up is what you are valuing there. So therefore, there won't be any goodwill or capital reserve if it had to be an asset acquisition. In the case of business combinations, what you will be doing is what is going to come is at fair value. What you are giving up is at fair value. There will be a difference. The difference will go to goodwill or a capital reserve. Whereas for asset acquisition, wo hoga nahi, because what you are giving is what you are attributing to what you are getting. Okay. So that is how you will be differentiating between asset acquisition and business acquisitions. Okay. No goodwill in case of asset acquisitions, but there will be a goodwill in case of business combination. Okay. So that takes care of note 1. Please take care of these adjustments. The next note, note 2, deferred consideration. Deferred consideration. Okay. Okay. Yeah. Tell me, Soham. Please ask. Don't worry. Basic, high-end, complex, kuch bhi ho. Confusion is a confusion. You should not feel sad to ask. Feel free to ask. Okay. Please ask. I'll wait for your query. I'll wait for your query because I'll start deferred consideration after that. Okay. Tell me. In case of business combinations by purchase of shares, will there be goodwill in the books? I'll come to this later when we do step number 5. Okay. When we do step number 5, I will come to this. And we will be solving a question where there is purchase of shares and we have to prepare a balance sheet. So that point of time, I will come and then I will address your query at that time. For just in brief, it will be consolidated financials. In that case, it will not affect individual financials. Okay. So I'll come to that, but this is your answer. Okay. We have a detailed problem on that. Don't worry. Okay. Now coming to deferred consideration. Acha. What do you mean by deferred consideration? See, deferred consideration mein what happens is, suppose you go to buy a company, but aaj ke tarik mein paise nahi hai aapke paas. You don't have money in your pocket. You know that you are going to get money after a period of 3 years. You know that you are going to get money after a period of 3 years. And since you are going to get money after a period of 3 years, the fact is that you go to the target company and say to its shareholders, look, I want to acquire you, but aaj ke tarik mein paisa nahi hai. Today there is no consideration that I have. I can pay you after a period of 3 years. So then wo bolega, theek hai, how much you intend to pay? So the acquirer tells, if I intend to pay, okay, so purchase consideration is 1,000 rupees. Purchase consideration is 1,000 rupees. I will pay you 1,000 rupees after 3 years. The shareholders of the target company tell, Dekh, ek to you want to acquire us. दूसरी बात, you are going to pay the same amount today also and after 3 years also, वो नहीं चलेगा. That will not work, because We are ultimately getting the consideration after a period of 3 years. So therefore, what we want is, we want you to pay 1,331 rupees. We want you to pay 1,331 rupees as purchase consideration after a period of 3 years. After a period of 3 years. Sir, why are you paying 331 extra? So then he will tell, look, you are taking the business now and paying the money after 3 years. That means you are in effect deferring the consideration to a period of 3 years. You are in effect postponing the payment after 3 years. So there is a passage of time, right? There is a passage of time. See, this is quite different from what we will study in contingent consideration. Deferred consideration, you just understand that this is a payment you have to make. It is not dependent on any condition. It is dependent only on passage of time. And passage of time कोई condition नहीं होता. सो जाओ 3 साल, time फिर भी गुजरेगा. Your time will still move on for a period of 3 years, even if you don't do anything. So this is not dependent on any condition. This is purely dependent on passage of time. So what the shareholders of the target company will tell is, if you pay now, pay 1,000. If you pay after 3 years, pay 1,331. So this extra 1,000, this extra 331, you tell me, friends, is it attributable to the net assets of the selling company, or is this extra being paid on account of passage of time? Is this 331 extra being paid on account of the value of the business, or is it being paid on account of passage of time? Srishti is saying it's on account of passage of time. What about the others? What about the others? It's not attributable to net assets. It is attributable to passage of time. That is time value of money. Absolutely right. So therefore, this 331 is nothing but a finance cost. This 331 is nothing but a finance cost. And because it is a finance cost, we will accrue this finance cost every year over a 3-year period. And where will this finance cost go? It is not towards acquisition of the business. Acquisition of the business ke liye, it is this value of 1,000 rupees only. This 331, I have taken a discounting rate of 10%. So year 1 will be 100. Year 2 will be 110. Year 3 will be 121. So the entry will be finance cost account debit to deferred consideration payable. Every year I will pass this entry. So at the end of 3rd year, my deferred consideration payable will have a balance of 1,331. And ultimately, that will be paid off at the end of the 3rd year. Is it okay? Sir, where will this finance cost go to? This will obviously go to the P&L. But sir, we are acquiring a business, it should be capitalized. Kyun? You are not incurring this 331 for acquiring the business. You are incurring it for the time that you have taken to settle the initial consideration that was agreed of 1,000 rupees. And therefore, you will take this on a periodical basis as an accrual in your P&L and credit deferred consideration payable. Okay, and settle it off later on. Is it okay? Yes. So this is all about deferred consideration. Okay. So today when I am going to calculate the purchase consideration, see, I know one thing for sure. I will be paying 1,331. Can I take 1,331 in the PC today? No. In the PC today, you will be taking the value of 1,000. The discount rate will be given to you in the question. You don't have to worry about it. Okay. You don't have to worry. It is a contractual obligation to deliver cash after a period of 3 years, and therefore it is a financial liability. It is a financial liability. Okay, so therefore deferred consideration, come back to the place where you left half a page, and write here add. ये fair value नहीं होगा, this is going to be present value. Since it is a negotiable amount, it is deemed to be fair. It is a transaction between unrelated parties in a market at the transaction date. So the present value will be the fair value. So present value of deferred consideration. Note 2, present value of deferred consideration. This is your note 2, which we will be writing. Okay. All right. So note 2, deferred consideration. Okay. You can write here. I'll give the example later on. It refers to PC payable in cash at a future date. Since it is payable to owners of S Limited, comma, it should form part of PC. However, since it is paid in future, comma, a part of this payment is attributable to business rupees 1,000, and part of it is attributable to what? To time. That is 331 in our example. Thus, on date of acquisition, comma, deferred consideration should be measured at present value. Should be measured at present value. Subsequently, accounting for deferred consideration which is classified as a financial liability, contractual obligation to deliver cash would be based on amortized cost principles under Ind AS 109. Amortized cost principles under Ind AS 109. Okay. under Ind AS 109. Have you written this down? Done? Okay. All right. So that is done. Okay. So let us just write this example only. Net assets rupees 1. How much do I keep it? Pay now 1,000. $1,100. PC rupees 1,331 payable after 3 years. Okay, payable after 3 years. Discount rate 10%. Discount rate 10%. So present value of purchase consideration is equal to 1,331 divided by 1.10 raised to 3, 1,000. Okay. Have you noted this? Yes. I'll just rub this off because you would have written this part. Okay. And then let us account for it. Net assets account debit 1,100 to deferred consideration payable 1,000. So this is giving rise to a capital reserve. To capital reserve 100. And then year 1, year 2, year 3. Finance cost debit, which goes to P&L, to deferred consideration payable 100, 110, 121. So finally, end of third year, at end of year 3, deferred consideration payable is equal to 1,000 plus 100 plus 110 plus 121, 1,331. So entry will be deferred consideration payable debit to bank 1,331. 1,331. Is it okay? Yes. So it's attributable to time value of money and nothing else. Okay. Note it down, guys. Yes, all done. Once you have noted, please let me know. So much is there to study. Done and clear. Okay, fine. So that's it for today. Let us end today's session. Revise and come. Okay, okay. I will consider that. Sure, sure, sure. Okay. Sure, Sumit. See, the problem is I tend to leave by 9:50, 9:55. मैं वो 10 मिनट भी थोड़ा एक्स्ट्रा पढ़ाऊंगा तो शायद थोड़ा टॉपिक कंप्लीट होता है. So that is the reason I generally avoid a break, but I'll keep your suggestion in mind and I'll give a break. Okay, I'll give a break. All right. So that takes care of our session for today. Please revise and come. Please revise and come, and we will straight away move on to the next topic. I'll not give a revision intro like how I normally give. I can save about 5 to 10 minutes on that. So we will straight away move and revise and come. Look at the study module for the questions if you have not seen. See those questions, try to solve those questions, and we shall discuss the remaining portion of the standard on Thursday. Saturday, I have to wind up this standard at any cost. Okay, so we will do that accordingly. Okay, so see you guys on Saturday. Thank you, everyone. Take care. Okay, take care and see you, everyone. Thank you.